What if you could lock your mortgage rate today, be fully protected if rates go up, but still have the ability to lower the rate if they drop? Most buyers think you have to choose one or the other. You don't, and depending on who you work with, this might not even be an option. Paul Byron here. Today we're talking about rate lock flowdowns. If you like straight to the point content like this, hit the like button, subscribe, and turn on notifications so you don't miss the next one. Every buyer hits the same moment. Find the house, you go under contract, and now the pressure kicks in. Your lender asks, do you want to lock your rate? It sounds simple, but it's not. Because what you're really deciding is, do I protect myself, or do I take a chance and try and get a better deal? If you lock and rates drop, you're stuck watching everyone else get a better payment. If you wait and rates go up, your monthly payment just got worse, and sometimes significantly worse. So now you're guessing, and guessing with something this big is a bad strategy. This is where working with a broker changes how the whole thing works. Here's how we approach it. We lock your loan with one lender early in the process. That gives you protection. If rates spike, you're already covered. You're not chasing the market anymore. But we don't stop there, because we're not tied to that one lender. We can keep watching the market while you're under contract. If rates improve, we're not stuck. We can move your loan to a different lender that has better pricing. That could mean a lower interest rate, a lower monthly payment, or even lower closing costs depending on the scenario. Same house, same timeline, but better structure. This matters even more in a market like this. Rates aren't sitting still. They move, sometimes weekly and sometimes daily. So if you're working with someone who only has one option, you're basically locked into whatever happens at that moment in time. There's no flexibility. Banks operate completely differently. When you lock in with a bank, you're in their system, their rates, their guidelines, their products. If something better shows up somewhere else, they can't just move your loan. It's not how they're built. So your strategy becomes, hope you timed it right. Let's walk through this in real numbers. You go into contract at a rate of 7%. We lock it. Now you're protected. 2 weeks later, rates drop to 6.5%. That difference on a typical loan could easily be a couple $100s a month. With a bank, you're either stuck or trying to restart the process mid-deal with another lender, and that's risky. With us, we just ship the loan over to another lender that's offering that lower rate. No guessing, no starting over, just adjusting to the better opportunity. At the end of the day, this is about control. Most people think getting a mortgage is just about getting approved. It's not. It's about how your loan is structured and how much flexibility you have while everything else is moving. If you're buying in the next 30 to 90 days and you're even a little unsure about where rates are going, this is something you should be asking about. If you're in Rhode Island, Massachusetts, or Florida, and you want to lock in protection without losing the upside if rates improve, reach out. I'll walk you through exactly how we structure this based on your scenario. Because the goal isn't just to close, it's to make sure you're in the best possible position when you do.